Well, this is Dr. Buddy Crum, and we're so glad you joined us today for Marketplace Moments. We have some exciting things to talk to you about. Thank you for your questions you've sent in. And remember, always, we're glad to receive them and look forward to it. Well, I'm with me, of course, is Don Wales. He is the one also who has had a lot of experience in investing and has even today still giving people a great deal of advice. Don, so good to be with you again. As always, look forward to what it is that you bring to us and the wisdom that God's given you.
Well, I appreciate that. That's very kind. And it's always so good to be with you and spend time, especially when we have some of the questions that the viewers have asked. And we've got a few of those today, so I'm excited to kind of get through them. We're obviously in, at this particular time, difficult economic challenges that we're facing. So we've got a lot of good material to talk about.
Absolutely. I have questions myself. I wanted you to tell me when this inflation's going to end and when things are going to really be so back to normal, as we would say.
I've got all the dates, times, everything you need right here of when that's going to end. So we'll stay at the end of the broadcast. We'll have that for you.
You're right. Don't forget that. You don't forget. Well, you know, one of the questions we received is, how is it that people know how to judge a market, but also how to judge a company? You know, they're always the greatest opportunities we know are investing in those companies that are in a startup. But let me be very quick to say it's also the greatest risk.
Yes.
The failure rate is so much higher. We hear of the good things like an Apple or something like that, but most of them fail in the first 5 years or sooner. Yeah. But, you know, one of the things, and that's a big subject, let me just hit on 3 or 4 or 5 things quickly that you look at for when you are investing in a company, whether it's on the exchange or whether it's a startup. Number one, is there a market long-term for what it is that you're looking to buy? Is it a sustainable market, like during the good times and not so good time? But if there's no market and they're trying to create a market, you need to wait a little while before you invest in that until there's a little more. Number two, let's look at the management of that company. Mm-hmm. Is there a successor? Is there somebody that is being raised up and trained to take that forward? Because we don't want the business to stop just before things. We saw in Disney recently in the change of the CEO and some totally different thinking and philosophy cost them a lot of stock value because of their difference wasn't the same as in the predecessor. And then thirdly, oftentimes companies grow too fast and they can't absorb the growth. And so you have to be sure that there's good operations in place. That's right. So that who is running the operations. And that's when, you know, you want to look at their experience and who they are, not always credentials. I also want to look at how much experience they've had doing this. And then, of course, lastly, we want to look as much as we can as to what history is available. Yeah. What have they done? Where did they come from? And who are they? And where are they going? Do they have a vision? Do they have a plan? Mm-hmm. And when working with companies, I used to help them go public, you always have to have those ingredients present if you want to build a market. Yeah. So what I'm saying is you have to do your due diligence. Yeah. We know that. But if you have the money to lose, then you have the opportunity to gain.
Well, and you're absolutely right. And, you know, what we're discussing is individual stocks, really. If somebody's buying stocks, there's a lot of ways to invest. And for many investors, we talk about mutual funds, indexes, different things. For maybe a smaller investor. But doing your due diligence on a company and doing some research, sometimes we refer to that as qualitative analysis, where you really get behind the scenes and look at it, is not as hard as many people think. You can do research, obviously online. Now there's a lot of things. During part of my tenure as an advisor, one of the things that we did was research on the top tier money managers that we used. And we were looking for several things that were good indicators to us. If they had style drift, if they were a mid-cap money manager, did they style drift into small or large cap? And if they were same management team that got the results, are they still there? Was the fund bloating? There was many things that we were looking at that we're good indicators. And you can do the same thing with the company. Take a look at it. What we always really want people to understand is be careful of those new startups. They can be good, but many times they're sold on the FOMO, the fear of missing out. This is the next Google. This is the next. Well, most of those don't work out. More of them fail than succeed. So you really have to do your homework. And then one of the things that some of the best money managers in the world do is something that we call nibbling. Rarely do they go all in on something and just say, this is a great buy. They don't just throw their money in. They start investing in small increments and watch the company and keep an eye on it. And that's a good way to, if you're investing in something, is to put in a little bit and kind of feed into it, nibble as it goes up. Now, just because it goes down doesn't mean it's bad. Just because it goes up doesn't mean it's good. But by doing some due diligence, you can get some good stocks that way.
Yes, in observing some entrepreneurs that I've known have done well, and then they get what we call over leveraged. They have the ability out of their success to borrow a great deal of money, but then when the market goes up, interest rates go up much higher, then you begin to see that. That's kind of what our country's doing today. We're borrowing a lot of money at a low rate, but what if interest rates go up?
Yeah, and you really have to watch for those because they're dangerous. But you encourage anybody that's looking at, do your homework on a company, do some research, get behind, look at some of the analytics that they're looking at, or that are available and they're online, because that can tell you a pretty good indicator. And if you see red flags, then let that serve as a good notice that you may want to watch them. Put them on watch for a while. Maybe don't buy them right away.
Due diligence is critical.
Yes, it is.
And it's no different. I would say the best school teacher is when you get in the market and you start learning then that there are ups and downs, and they're going to happen. So you have to be prepared.
Well, there's no way to avoid them. That's one thing that we try to teach people is you've got ups and your downs, and you're not going to avoid those. That's part of what risk is, and part of creating a good risk profile is knowing how to manage that. I hope you enjoyed the broadcast today. I hope there are some things that can really help you to get investing or keep investing. That is our desire here. I wanted to make quick mention of helpmeinvest.com. Helpmeinvest.com, an organization that we've put together. There's no fees. There's no products to sell you. It is literally designed to help you invest, to become a better investor. So you can go there, set up an appointment for 30 minutes. We'll spend some time with you. We'll go through your portfolio. We'll help you get started wherever you're at. Helpmeinvest.com. I hope you'll take advantage of it. I hope that you will continue to send in your questions. They mean a lot to us because we can talk about a lot of things, but what we really want to do is find out what's important to you, the level of understanding, the questions that you have. So hopefully that we can add value to your investment knowledge, and that you can increase and grow in that, and stay curious and read as much as you can, get as much information. But when you have a question, please feel free to just send that in to us. Send those questions in, because we really do enjoy them, and answering them helps us to make sure that we're being relevant and pertinent to you.